Hello. We're about to, there we go. We got Facebook up, I got YouTube up. We're rocking and rolling pretty quick this morning. So I've kind of teed us up here. We've gotten a few questions. I wanted to talk about our market a little bit since we've shifted yet again. So the last shift that we were really talking about was turning us more in favor of buyers. And I think a lot of people are still coming in the market expecting sellers to take a whole bunch less for their houses, to pay for their interest rate buy downs, to pay really big concessions like $10, $12, $15,000. And we're not really seeing that anymore. We really only have one buyer's market in the whole valley, and that is still in Buckeye. So if you're looking in Buckeye, you can still make some of those negotiating deals. However, the rest of the playing field has kind of jumped back up. Queen Creek proper is quickly coming into a balanced market. Santan Valley, from the numbers that I'm watching, though, is a seller's market and has made that shift. So those two pieces are a little bit hard to break out depending on where those lines are for Santan or Queen Creek. But really, those homes that are in the $300,000 and $400,000 range in Santan are going super fast. You can't ask for a whole heck of a lot, maybe a little, but they're going pretty close for what list price is, and we're seeing multiple offers on some of them, and they're going in weekends. So keep that in mind when you're starting your home search. So for the vast majority of our market around town, though, we're talking weak seller's market. And what that means is that prices are going to go up, you guys. They're not going to go up huge jumps and gains. There's some of those properties that people are fishing for the crazy offers to look like a hero and just see where it tops out. So be aware of that. If something looks like a good deal, a smoking deal, it probably is listed like that for a reason. So keep that in mind. But the vast majority, like Chandler, Gilbert, Mesa, they're all 150 to 2. I think Chandler might have even ticked up to 240, 250 on the market index, and 100 is normal. So if we're talking 200, it's 200% of normal, meaning it's moving fast. That's a relatively strong seller's market. So keep that in mind when you're out house hunting. We're down under 13,500 active homes, and that's the entire market. So that's not a whole heck of a lot. And we're just under 10,000 that are under contract. And so that's putting us right about a 1.3 month supply. It's going fast, you guys. We're under 2 months again. So it's not, the reasonable expectation is not that things are going to go in a weekend, but we are seeing things go in a weekend. They should not be lasting 3, 4, 5, 6 months though anymore for the vast majority. Rates, we got some good news as far as economics go. I think it was this week. So the rates have kind of stabilized and dropped a little bit. So conventional, again, we're at 6.39 today. FHA is below 6 at 5.97. VA is right at 6, and Jobo's at 5.95. So if you guys want to keep up on those rates with us again, Mortgage News Daily is the website that I keep tabs on it. We've gotten some questions this week about investments, and so I wanted to share that with you. One of them is, why buy a house if there's no cash flow? This is, come on, phone. That's a great question. We'll touch on that. But why buy if there's no cash flow on a property? And so what we're talking about cash flow is when you buy a house and you have your mortgage and all your fixed costs, do you have money coming in over and above what that, what those payments are? So for easy math, right? You have $1,000 mortgage. Are you renting it at $1,000? Because that's no cash flow, zero cash flow. If you're renting it at $1,500, you have $500 in cash flow. So why would you rent a property without any cash flow? There's two reasons. When you're doing this, you have a mortgage on it, right? So you've leveraged some money on this house that you are borrowing money from to buy it. So when you're investing, you have a tenant that's paying all of that mortgage. So that 80% of whatever that purchase price was, somebody else is paying that down for you. So at the end of whatever your loan term is, 15, 20, 30 years, somebody else has paid for basically the entire property. The other point to doing that is the appreciation game. So homes in Phoenix appreciate on average like 4% a year, I think is our trend line's at 4% a year. So if you're talking 30 years into a game, that house should have doubled in value, if not tripled. So those are some long-term considerations to factor in when you're looking at a zero cash flow situation. As long as you can cover out-of-pocket expenses, like if an AC breaks or there's a pipe leak, something like that, you have the cash reserves from other investments or job income, whatever that might look like. If you can cover those, there's still way, 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 way great long-term benefits to owning a property that does not have positive cash flow. So I wanted to have that conversation because a lot of our single family homes right now are not, there is no cash flow with the way that rates have adjusted. So if you're looking at buying locally without putting a whole ton of money down, that's kind of the reality that you're looking at. The other question that we got is, should I look at multifamily? So multifamily is like a duplex, triplex, or a fourplex. So it's 4 units in one, so it's one price. You do have to put down a little bit more money, so 25 to 30%, to buy one of those investments, as long as you're not living there. So if you're looking at this as an investor, you can buy a fourplex on an FHA loan as long as you're living in one of those 4 units. So you can do that with 3.5% down, guys. Fun fact that not a whole lot of buyers take advantage of. But if you're buying it on the investment side, you buy a fourplex. Why you would do that is you have a lower risk of all 4 of those being vacant and not having any money coming in to cover your costs. You would have to have all 4 of those leave at the same time to not have any money. So if one tenant moves out, you still have 3 that are paying rent. That kind of offsets that stuff. We have seen some, if you guys want the list, let me know. I have seen some that have some pretty decent cap rates right now. And a cap rate is the monthly income that you make as a factor of whatever that purchase price is. So with interest rates being really low, we saw cap rates get pushed down to like 4, 5, 6%. I don't really like a 4, 5, 6% cap rate on this stuff. That's hardly worth your time. But now we're seeing them go 6, 7, or 8%. I even saw one the other day that was 10%. Somebody else saw it too because it's not available. So if you're looking at some of those historically, really good cap rates on these investments, these might be things that you consider. Instead of buying 1 or 2 single family rentals, you might switch and do a fourplex. So if you have questions on how that would work, let me know. The caveat when you're buying a lot of those, for the majority of them, they do have tenants in place and you can't go put eyes on them before you make an offer. So you have to do a little bit better due diligence and seeing the property and going through it in person during your inspection period. And really before you're prepping the offer, you're really just diving into numbers. That's all that you want to do, is make sure that those numbers work when you're looking at these from an investor standpoint. So those were the questions that I had today. If you guys have anything else, I'll stay on here for a minute. Oh, this question right here. Yes, we do have a open house this weekend, and it is going to have hopefully quite a bit of traffic. We just did a price adjustment on that one. So it is 7294 West Molly Lane in Peoria. It's beautiful. It's a 2020 build with $160,000 in upgrades, you guys. Beautiful house. We'll be there Sunday from 1 to 3. So if you guys have questions, let me know. Otherwise, we'll catch you next Friday. Bye.